This is Trader Travis, and I'm coming back with another Guns Blazing series. And let me be serious, because this is a serious video. I'm actually coming out, and what I mean by guns blazing, like I'm coming out swinging against all the gurus with their deceptive marketing, right? Who say that selling options is better than buying options, or hey, when you sell options, you have like a high win rate of 80 to 90% on your trades, and that you can make like 10% return on your money a month. Now, some of those are technically true, but they are misleading. So before I dispel all these myths and lies, full disclosure, I have friends who sell options. This is not towards you. We are still cool. This is mainly towards the gurus and their deceptive, marketing and spreading lies. Because there are a lot of people who come to me who think, yeah, selling options is the way to go. And you shouldn't buy options because I heard the 80% expire worthless and buying options is a loser game. And I'm like, man, they are so misinformed and going down the wrong road. It's no wonder people have a hard time trading options or succeeding with options. And so in today's video, I want to share why selling options is not necessarily better than buying options, and how the whole 80% win rate and 10% return, oh my gosh, there is something way more important than a high win rate and having a 10% return on your money. So I know that statement probably seems ironic, like what's more important than a high win rate and a 10% return, Travis? Well, it's actually growing your account at an accelerated rate, and a high win rate and a 10% return won't necessarily do that. And so I'm going to explain here. First, though, let me talk about how selling options is not necessarily better than buying options. They say that because they say 90% of options expire worthless. Well, in the previous video yesterday, I debunked that myth by showing you someone else that had already debunked that myth, and I went to their website so you can look at the actual stats. The actual stats are that only 10% of option contracts go unexercised. That's a lot different than expiring worthless, but you'll have to review that video where I explained all of that. So that is a bold-faced lie. And again, anybody that says 90% of options expire worthless are either misinformed or lying. And I'm going to keep repeating myself because you really need to run the other way. Why would you want to learn from a liar? And why would you want to learn from somebody that doesn't know the actual truth, right? Because they're going to mislead you. And they may have good intentions, but they're going to have good intentions lead you to failure, and I don't want that. Another way they lead you to failure is because they talk about selling options is better because you have a higher win rate. And so now what I want to do is come to my broker account and show you what they're talking about. Even if you don't know how to sell options and everything I'm talking about, keep your thinking on the surface level. They sell, most of the option selling gurus, not all, but most of them promote high probability trades, meaning that you have a high win rate, right? And they say this is why it's better. It's like a casino, and they always use examples of how the casino, puts the odds in their favor, right? So this one right here is an example of a high probability option trade. So what I'm going to do is put up sell vertical, and if you don't know what this is, don't worry about it. But this means if I place this trade right here, I have odds like a casino. 80% of the time I'm going to win, and only 20% of the time I'm going to lose. And they say, hey, those are like casino odds. People bet and the casino pays out and things like that. But the casino always makes sure that they make more money than they lose. They receive more than they pay out. And so they use that as a justification as why you should trade options this way. So with this particular trade, yes, it has a high win rate. You will win probably 80% of the time. And then when you lose, they say, oh, you just got to keep trading. Their law for averages and high numbers, and you just got to keep going, and the probabilities work in your favor. Let's think about this. From what I've seen, building wealth, anyway, probabilities go against human nature, right? This trade right here, you can make $11 but lose 89. And they'd be like, but Travis, it has a high win rate. It has a low probability that you'll lose that money. And we adjust trades and all that. Well, I'll get to adjusting in a bit, right? This goes against human nature because when you start losing money, you only made $11, right? But you won that $11 several times. But what I've seen is that you will have 8 winning trades, right? You're like, your ego gets pumped up. You're like, man, I'm killing it in the market. I haven't had a losing trade all year. And then when you have that one losing trade, your human nature kicks in and you forget all about probabilities, and all you're looking at is the losses in your account. So let me show you what this looks like. $11, you win 8 times. Woohoo! I won $88. I got a 100% win rate. And then month number 9, woo, you lose $89. And you watch, you're not looking at probabilities. Technically, if you lost on that next trade, you're down $1 if the numbers play out like this. But you're not thinking I'm only going to be down $1. You're thinking I'm watching pretty much an entire year's of profit go down the drain, and it screws with your head and you start doing something emotional. So that is why this doesn't work out for people, because it goes against their human nature. Part of success with money is designing a strategy that is not only profitable, but it aligns with your human nature. And that's beyond the scope of this video, but we do teach those strategies in the Success Academy. So that's why this doesn't generally work for people. Yes, in theory, the probabilities work out like this, but it doesn't work out for people because it goes against human nature. So what I'm going to do here is, most people would not trade all 12 months out the year, but I'm going to go ahead and average it out. So we're going to do about 12 trades, right? 3 of them will be losers. We take 3 divided by 12. That's 25%. So 25% of your trades will be losers. So that's close to this probability here. Not exactly, but it's close. So what I'm going to do is fast forward. We're going to do 12 trades out the year, $11 each. We're going to make money on 9 trades, right? That's our high win rate. 9 divided by 12, you're going to have a 75% win rate. Again, this is close, not exactly accurate, but this is how the numbers play out, and they tell you to keep trading like this and numbers work out in your favor. So you'll make $99, right? But remember, with the probabilities that say you're going to have some losing trades, that is a fact, right? Probabilities are just that. Probabilities, they are not guarantees. So if we lose on 3 trades, we're going to lose 267. And here it is laid out all nice and pretty for you. So we had 9 trades, we gained 99, then we had 3 losing trades. 99 minus 267, you're down $168, right? This is how the numbers play out. But again, you wouldn't even get to this, because what idiot would keep trading when they're losing 267? No. What person in their right mind are going to, well, I mean, some people have the nerves of steel, right? You're losing 89 and you only made $11 profit. This is your max profit. You can't make any more than this. This is your max loss. This is guaranteed, right? We'll get to we'll get to how smart this is in a second, but I've seen people just come completely unraveled. You're going to lose almost 8 times what you made, 8 to 9 times what you made. Yeah, that doesn't seem pretty smart to me. So basically, you risk $89 to make 11. Does that seem smart to you? Do you think rich people, i.e. Warren Buffett, right? Do you think he takes risk like this? I don't think so. I don't think that's how he became a billionaire. He became a billionaire by following 2 rules, right? Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. So you're like, okay, Travis, yeah, well, first I know, and they're a little defense. They're going to be like, oh, we adjust trades and all that. But what they don't tell you is that adjusting trades means you screw up your risk reward. You already risk 89 to make 11. When you adjust, you put more money towards a trade. So you're not risking 89. You're going to almost double your risk usually to adjust. You have more money tied up in the trade, which means money equals emotion. You have more emotion tied up in the trade, and it's just compounding stupidity, and it just really messes people up, right? Again, I develop stuff based on human psychology, because success with money is 80% mental, 20% technical. The whole high probabilities, that get you to focus on technical aspect of investing. That's not how you're going to succeed. You're going to succeed by focus on the mental aspect, making sure your strategy doesn't unravel you emotionally. If that doesn't sound right, but anyway, I'm going to roll with it. So, all right, Travis, you beat up this high probability option selling. So what do? Well, glad you asked. I risk 11 to make 89. That's how I win at the game of investing, right? I make sure I set up my trades where I risk losing 11, but I can make 89. Right? So mine is flip-flop. I will gain 267. Oh, yeah, because they were like, well, Travis, you only have a low. That's how I have more losing trades than winning trades, and I still make money. And people wonder why. It's because, yeah, when I have setups like this, yeah, there's a low probability of me winning. I win on 1 or 2 trades, right? Maybe 3. And I lose on the majority. But here's how it plays out. If I only won on 3 trades and then lost on 9, I'm still up 168. Doesn't it seem more aligned with Buffett's philosophy of not losing money, right? So the summary there is chase profit, not high win rates. And speaking of high win rate, let's come back to this good old trade here, because they were like, oh, yeah, I have a high win rate. Okay, what would you rather have? a high win rate, or do you want to make money like I do? This technically has a high win rate, but you lost money overall. Look at their marketing material. They talk about high win rates. They don't talk about their account growing overall. Do you want a high win rate, or do you want to actually make money? Big difference there. Now, on that note of high win rate, because I've beat this up enough, let's talk about this 10% return. I get 10% return on my money a month. Yes, this trade, they will place about one of these a month. If you won and you made your $11, you divide that by the risk of loss, you just earned a 12% return on your risk. That's how they calculate it. So when these guys, and I said this in the intro, I said it's not lying. They're technically telling the truth, but it's misleading. You won, you had a 12% return on your risk capital, right? So they will promote, they have a 10% return on their money each month. Technically true, but it's just misleading. Here's why. They don't talk about what their account grows overall. All right, that's the difference. And I said in the beginning, there's something more important than a high win rate and a 10% return, and it's actually growing your account. So let's imagine this was a $2,000 account and you made $11 on it. Divided by your $2,000 account. Whoopee, in 1 month, you just increase your overall account by 0.55%. If you were able to duplicate that, well, we already showed that you can't because it probably is, because it is messed up risk reward here. You can't win. So your overall account only grows by 6% in 1 year. Yeah, do you want that? If that's pitiful, you're going to show up every month to do all that, you might as well just buy and hold. Buy and hold to get you more than that, right? So yeah, this has a 10% return. So when they, in their marketing material, when they say they earn 10% return on their money, they didn't say 10%, their account doesn't grow 10% a month. What they're talking about is the percentages on their trades. Yes, that trade has a 10% return, but their overall account does not have a 10% return a month. If it did, they'd be on the cover of Forbes magazine, or like me and the rest of the guys, they'd be winning the U.S. Investing Championship, but they do not. Anyway, moving on. Lastly, what I'll leave you with is my opinion is that selling options is not better than buying options. They're just different. And since I'm over my time here, I won't explain the difference in this video, but I will give you the secret to what I feel is my trading success. One, you've already heard about it. It's not about strategy. It's about mindset. To win with money, you have to consistently make good decisions with your money. And when you risk $11, or when you risk $89 to make $11, that is not making a good decision with your money. That is not smart, in my opinion. Second secret to my success, in my opinion, is I don't just buy options or just sell options. I do both. So this way I get the best of both worlds. Right? Let the option selling and the option buying bigots argue over which method is better. My method is better than yours. Well, me and Success Academy members, we're going to be using both methods. And for an extra bonus, I'm going to throw in a little buy and hold into the mix because, hey, buy and hold is the original passive income strategy, right? You don't have to work. You just put your money in the market, does all the work for you. But we added a twist to it. We insure our portfolios. So that way we get the gain of buy and hold without the pain of buy and hold.